Hello folks, this is Raj Sastry from Raj Option Trading. Today I want to talk about my favorite topic. It's Internet of Things. Let's talk about Internet of Things stocks. It's also called IoT for short. According to Fortune Business Insights, IoT market is going to exhibit a CAGR of 24.9 percentage during up to 2027. So it's a very good growth rate for this IoT market. And also, if you look at RFID is going to increase in the future. And currently, country accounts for only 27.04 share. That means there is a plenty of market share to gain in this area. And China also, it's about to grow with a CAGR of 11.4 percentage. So, these two are a little bit related. So that's why I want to club both into one topic. And if you look at some of these images here, zebra.com, this is one of the market leader in the RFID, and there are RFID tags are used everywhere. It's this is in a hospital where they're tagging a RFID. It's also used in multiple places, including COVID-19 vaccine shipments. And next is umbrella.com. These guys have got powerful video and computer vision technology. It's used everywhere, and it's a very good story of late. So with that, let's jump into some of the stocks and look at my favorites in the IoT segment. So in the IoT segment, there are a lot of stocks. The stocks highlighted in bold are my favorites. First is Fastly. It's not completely a IoT play, but still it does some edge computing and also into content delivery network. I think it's there is some aspect of it, but not completely a IoT play. Then you got Impinj. It's a RFID play. ORBCOMM, Zebra, both are RFID plays. Then you got, Ambarella, Alarm, PTC, Skyworks, and so on and so forth. We will go into this little more details. The ones in the bold are my favorites. Let's look at some of the numbers and see why these stock make sense. From a number perspective, the way to read this chart is we got all these stocks, 25 of them, and they're organized by descending order of 1 year performance. So the one at the top, Fastly, it's a maximum performance in last 1 year, and it's descending order from then. And the reason I highlighted some of these is because one is huge performance. Next is revenue growth. I need to see a good revenue growth or a good gross margin, a combination of revenue growth, gross margin, and 1 year performance. That kind of makes the trick. And I also look at the cash, the debt they have, and see if it makes sense from a future investment. So with that, my favorites are really Fastly, mainly because good performance, double-digit revenue growth, a good cash, good gross margin, and the list goes on. And if you look at some of these companies, for example, Impinj, I think it's one of those under the radar stocks in the RFID. It's growing nicely. Revenue growth itself is low, but good gross margin. Wall Street likes it. That's why performance is so high in last 12 months. And we'll go into some of these companies in detail, and we also have some companies which are you do not think it's a IoT play, like DexCom as an example. DexCom has got this continuous glucose delivery type technology. It also has some of the sensors and whatnot. So that's why even though it's a medical device play, it's also an IoT play. So with that, let's look at some of the companies and take it from there. First, we look at Fastly. Fastly is really, world's most popular. It helps with the digital business, delivers fast, secure, scalable online experiences. In the past, one of the company TikTok accounted for as a huge customer, but I think they got over it now. Now it's more broad based. So with that, it's about $7.43 billion company, and 100% approved. The CEO here, Joshua Brixby. That tells something about the leadership, which is very good. And stock price is 64.84. With the latest rotation out of fast growing internet and cloud play into recovery play, this stock also came down pretty hard. I would think this will recover nicely as we go forward. And these guys have got good amount of cash and not too much debt. So stock chart is pretty good. Right, they have some bumps along the way. I think this is when TikTok saga happened, and now they are back with all this rotation play. I feel comfortable about this stock. You could buy a little bit, and keep buying more slowly, whenever there's a dip. So with that, from a market cap perspective, these guys have got steadily improved the market cap, as you can see here, 1.82 billion back in March, increased to 8.94 billion, 10 billion, came down a little bit. Now they came down a little more with all the rotation saga. So I feel comfortable here, because stock is it's a good play, and they got one competitor, which is Akamai Technologies, which is also doing well. But if you listen to CEO Joshua Brixby, he's a very charismatic leader. I think he's got what it takes to lead this company. So with that, from a revenue perspective, they've been doing very well, as you can see here, very good revenue growth, and year over year revenue growth is also very good. It's 41, 40, 60. It's a good double digit revenue growth, and they've been surprising on the revenue side. With the at least three times here, and once they missed back in September. Same story on the EPS side, also surprises most of the time, missed once, and a very good gross margin. This is something you see in an internet type, cloud type company, which is very good, and they're not still making profit, because that's why the net margin itself is negative. And from their latest earning statement back in February, month ago or so, they're basically saying the stickiness of their platform is really good, and they got dollar-based net expansion rate of 143%, which is very good. And also they have average enterprise customer spend is very good amount here, and revenue retention rate is 99%. This is a very good number here. The revenue retention is very important, and growth rate is very good, 40%. And they also generated 291 million in revenue, which is up 45%. And also from an outlook perspective, they expect the revenue to range 83 million to 86 million, which is kind of sort of in line with what they are doing right now. They don't want to be too optimistic, but they want to provide the outlook. So that's why they provided this number here, which is little above what they're doing now. I think overall it's a good story. It's a small company with $7.43 billion, lot of room to grow. I feel comfortable to buy on a pullback, and accumulate as it pulls back. Next is Impinj. Ticker symbol is PI. It's one of those under the radar stocks, and it's about $1.29 billion company, and $55.30 stock price. And these guys are into radio frequency identification solution. If you go to any store, all the RFID tags and asset tracking, authentication, all these things are done using this RFID technology, and this Impinj is a good player there. 82% approve the co-founder and CEO Chris Diorio, and they got good amount of cash, some debt, not too big, and stock prices done nicely. I mean, they got some bumps along the way, but overall stock has done very well. So I think that's why this is one of the stocks we should probably follow. From a market cap perspective, Wall Street has been pretty generous for this company. It's steadily going up with a little bit of bump back in September, but now they've reached $1.29 billion. And they're also they're not doing that great when it comes to revenue. It's a negative revenue, year over year revenue growth, but they've been surprising Wall Street with the positive revenue surprise. Three times here, one miss. And on the EPS side, they've been surprising positively, three, four times, which is good. Gross margin is about 47, which is a little bit low, but I think it's understandable because these guys are into hardware, the RFID itself, and some software. And they're still not making money. The net margin is negative. And from an earnings statement back in February, they exceeded the guidance they gave, which is a good thing. And sequentially, if you look at the 9/30 quarter and 12/31 quarter, they did 29.3 percent growth, which is a good thing. And they also announced 50 billionth endpoint IC, which is one of their internal milestone. They kind of crossed it, which is good. And they also they're also doing a year over year growth, which is a good thing. And from a outlook perspective, all these stocks, they have some supply issue when it comes to these semiconductors. That's one thing everybody calls out of late. And they are also trying to go away from their older generation 200 millimeter inventory into their newer generation M700. So they are in that migration as we speak. So as they go into this new M700, they feel they can make more money. And they expect the quarterly revenue to be between 41 to 43 million, which is sequentially above what they have done in the 12/31/20 quarter, which is 15.4% increase. So overall, from an outlook perspective, these guys are predicting a healthy outlook. So I feel we should probably look at buying this in during the pullback, mainly because it's a smaller company. Stock has been doing pretty nicely, and this RFID technology is very well needed. And it's we still have a lot of room to grow in the RFID technology. So with that, I feel comfortable to initiate a small position and watch this company and take it forward. Next, we'll look at two more companies. Next is ORBCOMM, ORBC. It's a very smaller company, about $543 million company. It's about half a billion. And these guys are into connectivity, devices, device management, web reporting, tracking, controlling. Basically around asset tracking type technology. And these guys are working closely with the government, homeland security, manufacturing, supply chain, and whatnot. And about 74% approve the CEO here. And stock price is very low, as you can see, $6.87. And stock has been, it's a 3-year chart here, has been doing nicely of late, which is a good sign. I think this company has some potential. As we look at the market cap, over the past 4 quarters, they have been growing their market cap, slowly but surely, which is a good sign. And year over year revenue itself is negative, but they have been surprising Wall Street with a positive revenue surprise. Wall Street always likes predictability and positive surprises. And on the EPS side, they have done one negative surprise and actually two negative surprises. So that's one of the reasons. Whenever they do negative, stock kind of comes down a little bit. So from a gross margin, I feel pretty healthy gross margin here, 52, 53, 54. And they're still not making money. It's a negative net margin. And from a quarterly statement perspective, I think they have done good. They came at the higher end of the guidance, which is a good thing. And net subscriber additions are down. you can think about that, because the COVID era, folks will be using some of these less of these technologies for asset tracking, with the global economy kind of coming back to normal, or some semblance of coming back to normal with the vaccine shots. These guys have a chance to do better. And they also they are also beginning new field trials with their cargo camera solution, which can help these cargo fleet type asset tracking. And they also talk about component shortages with the semiconductor, and their revenue projection for Q1 is 61 to 65 million, which is somewhere little in the same ballpark of what they're doing right now. It's a flat type guidance, maybe a little bit upside if it's 65 million. So with that, I feel because it's a smaller company, and company seems to be doing pretty well, and they've been surprising on the positive side. I think it's okay to initiate a small position, see how it does, and take it from there. Next is Zebra. Zebra is a well-known industry leader in this market, especially in the RFID area, and they're into multiple things. They do automatic identification, data capture, radio frequency identification. They have printers, specialty printers, barcode, personal identification, and whatnot. These guys are big players, and it's about $25 billion company. 94% approved CEO here. CEO is a very nice gentleman, and by hearing the way he speaks, he's got the company. He backs the company, so he's a very charismatic leader and does the right things. And the stock price is about 478.15, which is pretty decent. And they got good amount of stock, and because it's a bigger company, they also have a little bit bigger debt, but it's completely manageable. And with their stock chart, it's done very nicely. Every time the stock goes up, I always feel it's at the top, but they still manage to go up further, which is a very good thing. And if you look at the stock chart, I think they've done nicely. Some bumps here and there, but overall they've done nicely. And from market cap, very good acceleration, very nice. Even now, they're improving, which is a good story. This tells me they're grabbing the market share, and growing nicely. And they got good revenue acceleration, which is okay, not great, but it's okay. And from a revenue surprise, they've been surprised Wall Street three times with a positive revenue surprise. And also, I like the amount of revenue surprise. If you see here, 16, 57, 55, it's a consistent or growing at times revenue surprise. On the EPS side, all across the board, four times positive EPS surprise, which is a good story. And these guys have positive gross margin, which is good, and also positive net margin. They are making money, which is a great thing. And from their earnings statement back in February, their net sales grew more than 10%, on a quarterly basis, and 8% on an organic basis, which is a good thing. And also, they have strong growth in services and software. This is what can help to improve the gross margin. And their APJC revenue was down, and they also generated free cash flow, which is a good thing. And from an outlook perspective, these guys are expecting net sales to increase 25 to 29%, which is good. And for the full year, they anticipate adjusted net to grow 10 to 14%. Typically, for the full year, they may not have enough visibility, but at least they have given a forecast for the full year. So Zebra is my favorite in this sector, in the RFID sector. These guys are doing great. Even though stock is pricey, it's good to buy some stock, and keep watching it grow, which is a good story. Next, let's look at two more companies. Next is Ambarella, AMBA. It's about $3.98 billion company. These guys are into video compression, image processing, computer vision, all these cool things. And they also do security cameras, automotive cameras, industrial robotics applications, and whatnot. And long time ago, these guys used to be, they used to have one big customer. This was very long time ago, but now they have improved. They have multiple customers, and stock price is around 113.26, which is a good thing. And they also have a co-founder and CEO, which is a good thing to see the co-founder at the helm still. And they got good amount of stock, I mean cash, and low debt, which is always very good. And stock has it has done a little bit, like it's been growing slowly, but last early this year these guys have took off very nicely. It's good to see, after the last quarterly earnings, I think it's 131, stock has really shot up very nicely. And from a market cap perspective, it's a good acceleration. I mean, there are little bit bumps along the way, but overall, very good acceleration. And year-over-year revenue is positive during 131 latest quarter. They've been surprising on the positive side on the revenue, and positive side on the EPS side, which is very good. Gross margin is positive, and net margin is also positive. They are making money, which is a good thing. From a earnings statement back in March, which is pretty recently, they are basically talking about accelerated, business momentum. Their revenues are a little bit down from the prior year. It's understandable because some of these technologies will need some mobility and some economy to open a little bit. And one more thing is really from a security camera, it represented 60% of the revenue. So this is where they're investing more and more into security camera, computer vision. So that's where the margin is going to grow more. And they also pour more money into the R&D. So far they've put $1 billion in up to Q4 into this proprietary artificial intelligence, mainly for their computer vision. And from an outlook perspective, these guys are, they think, video artificial intelligence is early stages, and they expect computer vision to be 25% of total revenue, which is a good thing. They're investing there. They already spent a lot of money, about $1 billion. They want to reap the benefit. And revenue is expected to be around 67 to 70 million. So it's a little over what they are right now, which is a little bit improvement with the 8 to 13% improvement sequentially. So overall, these guys are given a good positive outlook, and the stock chart is nice. With this stock, I would buy on pullbacks because I've seen this company long enough. These guys have got ups and downs. I would buy on a pullback, and then wait for one more pullback if you want to add more. It always gives you opportunity during these pullbacks. Next, let's look at Alarm.com, ALRM, ticker symbol, about $4.30 billion company. These guys are into wireless web-enabled security camera. And these guys are good in the energy management, monitoring, and they got the COS got 97% approval rating, and stock price is 86.64. This is a very steady Eddie type company, as you can see here. They've done nicely, some bumps along the way, but overall stock has done very nicely. They got a good amount of cash, and debt is very much manageable. And from a market cap perspective, very steady Eddie, as you can see here. They got a little bit bump back in 930, but overall nice acceleration. And revenue also very good revenue growth year over year. And they've been surprising Wall Street with a positive revenue surprise, positive EPS surprise. Both are good. Nice gross margin. It's 64%, which is nice, consistent. A nice net margin. They're making money. So, whenever I see this stock, I feel like, hey, you know what, alarm.com, will it, is it a good story? But they've proven that, it's a good story. Stock has been doing nicely, and every bump, every pullback is a buying opportunity. I would be a buyer as it pulls back a little bit, and I would add to my position. So from an earnings statement, these guys exceeded the expectations. They also have a SaaS and license revenue, which is growing nicely, and they also had a strong 2020. And from an outlook perspective, they expect their SaaS business and license revenue to grow. And typically, they see lower revenue in Q2 to Q4 because that's when some of these incentives for the alarms will come toward the end of the year. So that's why they kind of it's softer for them, and they're projecting the 2021 revenue in the 660 range, which is a little bit more than what they're doing now. So I think it's a little bit flattish to a little bit up guidance, which is good. So overall, I feel it's a good stock. You could buy it on over the pullback and accumulate as you go forward. So with that, let's look at monthly performance of some of these companies and see how they've done in the past. The ones in the green background are my favorites. As you can see here, Fastly, $64 stock price, 52. They're 52% off of the yearly high, mainly because all these high growth stocks are out of Wall Street's admiration right now. So that's why it came down pretty hard, especially in February and March. It kind of came down. So I think it's a good time to initiate a small position and add as you go forward. PI, which is Impinj, $55 stock. They also came pretty hard, came down in March. I think it's good to buy some and take it from there. And same story or BC, but overall, as you can see the chart here, whenever they came down, they always bounced back. And alarm.com, the one we talked about, same story. We've done very nicely. Zebra, consistent player here. Ambarella, same, very nice. Whenever they fell off, they always came back. Overall, I feel good about these companies here. And you could buy some and keep it. Next, let's look at few more companies. My favorites are Garmin, ADI, DexCom, which is into the medical device, like we talked about earlier. Good story here also. These guys are a little bit near their top, a little bit off of their 52-week high, with the exception of DexCom, which is 20% off of the high. They've done nicely. I would, watch these stocks and buy on pullbacks. Next, let's look at performance from a weekly, monthly perspective and see why they make sense. And the ones in bold are my favorites. Fastly. I look at both revenue growth as well as gross margin, and also look at the performance itself. 1 year performance. So these guys have done nicely. I would be comfortable buying these companies in bold. And one of the favorites of mine is TE Connectivity. It's a $130 stock. It's a nice stock. It kind of goes up very nicely. It's got good revenue growth, which is around 11%, and good gross margin. I've been watching this for a long time. So with that, these are my favorites. Thank you very much. Happy investing.